Let's continue the conversation on rental property analysis, and we are getting to step number 5. We said we are dealing with a 2-bed, 1-bath in Arcadia. This is the property we are dealing with. This is our example. We said this property has got an asking price of 500,000, income of 84,000, expenses of 18,000, and lastly we've got a net operating income of 66,000 rand. There's the net operating income. Step number 5, which is what we need to get to. This is where we have to factor in the bond repayments. And on a property with an asking price of 500,000, you'd be looking at the moment, based on the current interest rates, you would pay somewhere around 3,900. This is what you would be looking at. Multiply this by 12 to get the annual figure.
46,800.
You would have 46,800. This is your annual bond repayments. Step number 5, that's what you have. Then lastly, what you need to calculate is your cash flow. Your cash flow, which is at number 6. So what you would need to do is to take this figure here that we have, which is the net operating income, and then minus your bond repayments, your annual bond repayments. So net operating income minus your annual bond repayments. So 66,000 minus 46,800. What do we have?
19,200.
19,200. This is your cash flow. Your cash flow. In other words, this is what this property puts in your pocket every single year. Number 7, which is the next step, you need to calculate what we refer to as cash on cash. What cash on cash tells you is what your return is on your own contribution. So you're basically calculating return on equity. So this is how it works. You've got a property with an asking price of 500,000. If you are, well, let's assume you are not paying any deposit. So you are asking for 100% finance from the bank. Your only cost will be transfer as well as bond costs. And these two would amount to roughly 30,000 rand. This would be for the transfer costs as well as the bond costs. You're looking at around 30,000 rand. And this figure here of 30,000 rand would be your only expense or your only contribution on this property with an asking price of 500,000. So with the cash on cash, you would be calculating your return on the 30,000 rand, which is your own contribution. So this is how it would look like. You would take the cash flow of 19,200 and you would divide it by your own contribution of 30,000 rand. Multiply that by 100. So you are calculating the return on the 30,000 rand, which is your own contribution.
64.
And this would be 64%. What it means is that on your own contribution of 30,000 rand, you are getting a return of 64%. So if you think about it, what it does for you is it helps you decide on whether you should invest in the property or whether you should rather take the money and put it elsewhere. So on your own contribution, you've got a return on equity of 64%. And that is the last step on the cash or rental cash flow analysis.